Welcome to the weekly market wrap-up. I'm Hannah Bernard. Equity markets continued their downward slide this week as more good news for the economy ended up being bad news for the markets. U.S. markets recorded their third straight day of losses on Thursday, with the Dow Jones falling over 104 points to close at 15,740. The S&P 500 also fell, closing at 1,775 points, and the Nasdaq dropped 5.41 points to close at 3,998. Turning to Canadian stock markets, the TSX also took a big hit this week. On Tuesday, the index hit a high of 13,359. However, by close on Wednesday, the TSX fell over 223 points. Thursday delivered no recovery, with the TSX finishing down 19 points to close at 13,114. The TSX Venture Exchange also fell nearly 11 points to close at 886. So what's driving the markets down? The dive comes on the heels of more positive economic data released on Thursday, which showed a rise in retail sales, which was more than forecasted for November. This was at the hands of consumers buying cars and taking advantage of discounts going into the holiday shopping season. The news, combined with positive job numbers from last week, is showing the economy may be finally strong enough for the Fed to begin QE tapering as early as next week. And this speculation is making investors nervous. Also, investors are becoming more selective as the markets continue to get more expensive. Indices have risen 50% over the past couple of years, while earnings are up only 12%. So if we are entering into a significant correction, this would not be unusual. Precious metals took another hit Thursday after posting strong gains earlier in the week. Gold received the brunt of it, dropping more than 2.5% on Thursday, coming precariously close to the $1,200 per ounce mark. Gold has lost a third of its value in a steady decline that began in September 2012. Palladium was hit hard this week as well, losing over 2% of valuation from the prior session. However, according to the Kitco News, palladium is the only metal to post a gain so far this year, and supply deficit issues as well as demand from the automotive sector should drive prices higher in 2014. Let's turn now to winners and losers and our picks for the week. The winner for this week is North Star Realty Finance Corp, ticker symbol NRF. Shares jumped up over 20% midweek as the company announced it will split off its asset management business to form an individual publicly listed entity. NRF's posted impressive revenue growth, which greatly exceeded the industry average. However, as the popular financial media outlet The Street reports, the growth in the company's net income is unimpressive. The loser for this week is Genie Energy Limited, ticker symbol GNE. Shares are down over 41% since last week after Genie Energy reported that one of its subsidiaries would acquire two other companies, sparking fears of overextension. Investors should also continue monitoring their financial statements, which indicate tremendous volatility in both top-line revenue as well as within cost control mechanisms. That's enough about this week. Now let's turn to BayStreet.ca's look at the week ahead and the snapshot of what analysts are forecasting for notable companies whose earnings reports are coming out next week. Here are 3 U.S. stocks to watch. First up is Oracle, with their earnings report coming out on Wednesday with an EPS forecast of 64 cents. Carnival Corp out on Friday is forecasted to break even. What a bruising pair of years it's been for the beleaguered cruise line after the sinking of the Costa Concordia in January of last year. Earlier this year, their bad luck didn't end as the company's Carnival Triumph liner lost power in the Gulf of Mexico and had to be towed. The stock has been trading in a very narrow range of $31.44 to $39.95 and could desperately use, well, a lifeline. Also on Friday is Walgreen Co. with an EPS forecast of 73 cents. It's been a fairly cheerful year at the corner of Happy and Healthy, with sales climbing and a new partnership announced with Johns Hopkins University in Baltimore, opening a new store catering to the campus community. Checking in on Canadian stocks to watch next week. First up is Empire Co. with their earnings report out on Monday, and it has an EPS forecast of $1.13. The grocer, with Sobeys and now much of Canada's Safeway, is looking to become a dominant player on the Canadian food store stage. Sobeys funded the $5.8 billion purchase price through a July equity issue, a bond offering announced in August, and $2 billion from a credit line and cash on hand. The acid test of how this sits with the market will be made known on Monday. Out on Wednesday is BlackBerry Inc. with a Q3 EPS forecast loss of 39 cents. Perhaps BB should be called the black and blueberry, for the beleaguered smartphone maker has been punished all year, with shares down nearly 50%. Still, some traders are crossing their fingers for good news amid all the gloom they have been greeted with this year. Finally, on Friday, Lumina Copper Corp comes out with an EPS forecast loss of 1 cent. On the resource-heavy TSX, this stock has been touted as one of the up-and-comers, having announced a major share offering in April. The price remains in the lower region of a 52-week range. Something fairly significant will need to happen to lift it out of this rut. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. But before you head out for the weekend, make sure to subscribe to our YouTube channel and find us on Facebook and on Twitter. For viral network news, Crush the Street and BayStreet.ca, I'm Hannah Bernard.